Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 19th of June 2021, and we're publishing our gold and silver weekly update for the week ending the 18th of June. It certainly has been a most exciting for some and disappointing week for others, as we saw gold and silver prices plummet. We shall look today as to the reasons why this happened and what is the forecast for the next week and beyond. So let's take a look. It's been such an exciting week that yesterday alone we produced 3 videos. Yes, 3 videos. And perhaps our best video for months was published on Thursday, at least in terms of interest. Now those videos are entitled, and this is in the order in which they were published. Yesterday's videos started off with our morning gold and silver update. Gold and silver recover a little. Then followed, midday or just after, by gold and silver prices fall further even after yesterday's crash. And yesterday evening, hidden reasons why the US dollar is strengthening, causing gold and silver prices to crash. And the video we've had most attention to, that published on Thursday, why gold and silver prices just crashed. And we list each of these in the description box below for ease of reference, and they act as a good supplement to what we shall discuss today, which will be a slightly longer video than usual. So let's get on to it. Gold fell $112 last week from $1,877 to $1,765, having hit a high of $1,878 and a low of $1,761. So it closed just $4 higher than its low for the week. This represents a fall of 6%. In sterling terms, gold finished the week at £1,279. That's down £50. And in euros, it closed at €1,488, and that's down 62 euros. Silver fell $2.12 from $27.93 to $25.81, having hit a high of $28.03 and a low of $25.77. Again, just a few cents, 4 cents in this case, above its week's low. A fall of 7.6%, even worse than gold's 6% in percentage terms. Now in sterling terms, silver closed at £18.72. That's down £1.08. And in euros, it closed at 21.78 euros. That's down 1.30 euros. Bitcoin is down $100 from our report of last week and currently stands, as we produce this, at $37,208. Though we have to admit, it did take quite a hit last night of a couple $1,000, because it's been as high this past week as $41,308 and as low as $34,735. Looking at equities, the Dow Jones closed on Friday at 33,290. That's down 533 points on the day, so it took a hit, and down 1,189 points on the week. So not a good week for the Dow. The S&P 500 closed at 4,166. That's down 55 points on the day and down 81 points on the week. The Nasdaq Composite closed at 14,030. That's down 130 points on the day and down 39 points on the week. Going over to energy or oil, Brent crude closed at $73.51. That's up 82 cents. And WTI crude closed at $71.64. So both above $70 still, and that's up 73 cents on the week. The dollar index stands at 92.22, and that's up a considerable 1.67 points on the week, and is the dollar's highest level since the 7th of April. And it's interesting to note that oil prices went up even though the value of the dollar also rose. And we saw some reports, we're not saying that we support it, we've only just literally briefly gave a scant look at it yesterday, where some are predicting $100 a barrel oil. We certainly hope that doesn't occur, and we will look into that in greater depth moving forward. Now, we concluded last week's video with the following forecast. Quote, "So our gold trading range for this coming week remains unchanged, with regular trading for gold between 1850 and 1950, with 1800 and 1995 as outliers, and silver trading between 27 and 2850, with 2650 to 2950 as outliers, though we are expecting the outlier territory to be reached this coming week." So let's take a look as to exactly what happened during the course of the week. So if we firstly take a look at gold for the week, this is where it closed, $1,877. It then initially fell on Monday, recovered some composure, and then meandered really throughout Tuesday and really till the early evening of Wednesday. Now that's GMT +1. Why did it do that? It was essentially waiting for the FOMC announcement, which came Wednesday in our time, early evening, normally 2 p.m. in Eastern time. And basically, the announcement that came out, although it held rates unchanged, and although its $120 billion a month bond buying program was also going to remain unchanged, what we were a little surprised at, though we did say we suspected the Fed would be a little hawkish, was the fact that they announced that 11 out of 18 governors had stated that they expected interest rates to rise in 2023, and a number of those perhaps even in 2022, and that they would also be discussing tapering its bond buying over the coming weeks. That does not mean they will implement it, but the very fact that they're discussing it now suggests that it is something that is likely to be introduced. That is, the taper, the reduction of the 120 billion bond buying program is likely to be introduced this year. And the key reason for that was the huge rise in annual inflation to 5% in the United States. Huge when compared that the UK's rate was 2.1%, and other countries predicting similar amounts but above 2%. So basically that clearly frightened the Fed and wanted to strengthen the dollar, get rates up in the marketplace at just a little bit to ease off the, if you like, the bullish pressure, but without theoretically damaging the economy by actually physically introducing those measures, because unemployment is still unacceptably high, though the situation appears to be improving. But anyway, looking at the price, we could see gold immediately fall within the space of 1835 to 21:53, so about 3 hours. It fell from $1,860 all the way down to 1,820. Tempted a rally, and then fell back again on Thursday down to $1,771. It closed Thursday at approximately 1,775-76, gradually rose Friday morning, and then fell back again and closed near, not quite, but near to its low. Now, we said that we expected the trading range to be between 1850 and 1950. Well, it happened on Monday, Tuesday, Wednesday. That was fine. Then Wednesday evening, the collapse came. Still kept us, though, within our outlier range, which was 1800. And it remained at that level until very late on Thursday, and then fell just below it. Attempted a recovery and fell back again to 1765. So we could claim that we were right for 4/5 of the week, but the last 24 hours or so actually knocked it out of our outlier range. And that was essentially because the Fed was more hawkish than even we thought they would be, but we did suspect there would be a degree of caution because of the interest rates because of the inflation announcements. Now, looking at silver, slightly slightly similar pattern. However, silver held up better initially. Now, we predicted normal trading between 27 and 28.50. And again, this is what happened. 27, 27, 27. But then late on Thursday, it started to collapse. Now, our outlier range was 26.50, which is where we saw quite considerable support. We knew there would be even more support below that level at 26, and then again just above the 25.60 level. But we did not expect, as we say, the price to crumble to this extent. So we stayed up to 26.50 until sort of midday on Thursday. Then it tumbled. Attempted a rally back close to 26.50, but collapsed again then on Friday. So our trading range held up, but the last 24 hours actually defeated it. So where does this leave us from a technical point of view? Well, $1,700 is key support, as it rests marginally above a double bottom. But should gold break through that level, then frankly the next downward key target would be $1,500 gold eventually. With this in mind, we err on the side of caution should you be considering stocking up on gold, at least until we get a clearer path as to where it is likely to be heading. We should know that answer by the first or second week of July. The path for next week and the week after, frankly, is unclear, and prices could go in either direction. We've already tested $1,764 to the bottom. That represents November 2020's low, but has not as yet fallen to the trend line at 1730. But we have resistance now at the 50-day moving average of $1,830. So short-term and medium-term momentums are negative, though the fast stochastic suggests we're in an oversold territory. It's contradicted by the MACD index and histogram, both pointing to lower prices. So the path forward is uncertain. We are erring towards, and you'll see in our forecast, lower prices, but within a range that is reasonably acceptable. Silver markets, to use a colloquial term, were hammered last week, breaking through crucial support levels, including $26, which is eventful. Support is now seen at 25.07, and resistance, again as with gold at the 50-day moving average, just above $27 at 27.02. Short and medium-term momentums again are negative, and both the MACD index and histograms point to lower prices. Now, let's have a quick look at the economic data this past week, which had an effect on prices, but not as anywhere near as dramatic as the FOMC statement, and what data we can see being released by the US this coming week. So looking at the economic data, we can see that on Monday nothing was scheduled, but on Tuesday we had retail sales, which actually shocked the markets. They came in at minus 1.3%, as you can see here for May, compared with what was originally 0%, but they upgraded it or revised it to 0.9% in April. Excluding automobiles, it was minus 0.7 and 0% in April. The producer price index was higher at 0.8%. The Empire State Manufacturing Index was lower at 17.4. Industrial production marginally lower at 0.8% compared with April. Capacity utilization marginally up. Business inventories marginally down. And the Home Builders Index marginally down. So not really great economic news. On Wednesday, we saw building permits down at 1.68 million. Housing starts marginally up. And the import price index higher. And this is where we're starting to see potential inflation now coming in. The initial jobless claims, though, were higher on Thursday at 412,000 compared with 375,000. And the continuous jobless claims remained unchanged. The Philadelphia Fed Manufacturing Index was marginally down. And the index of economic indicators remained unchanged. So, quite interesting that generally economic news not terrifically great with rising inflation. Now, we have to admit we do expect June's figures to be better as the economy has picked up, and we expect rises in production and certainly in retail sales because of all the stimulus checks that people still have to spend. Now, looking forward to this coming week, again on Monday, nothing scheduled. On Tuesday, we have the existing home sales for May. Then on Wednesday, which is an important day this week, we have the current-account deficit for quarter one, but then we have some of the flash PMIs. We have the market manufacturing flash and the market services flash PMIs, both for June. They're worth noting. And new home sales for May. Important, but slightly less market affecting. Thursday, of course, the jobless claims reports, but we also now have the durable goods orders for May. It was down 1.3% in April. Trading goods advance report and GDP revision for quarter one. It was originally set at 6.4%. Now, another important day, Friday. They usually happen on a Friday. It didn't happen last Friday in terms of information, but did in terms of the effect the market responded to the Fed's announcement on Wednesday. We have personal income. This is key. Consumer spending for May. Core PCE price index. This is one of the ways that inflation is also measured. And the UMich Consumer Sentiment Index for June. So, quite an important week, particularly a little bit on Wednesday, albeit they're flash PMIs. Thursday, jobs, GDP revision, but then Friday, income, spending, and PCE price index. Crucial. 2 days moving into 3 days. On the political news front in the UK, a new wave of infections is definitely underway in England, says Professor Adam Finn of the Joint Committee on Vaccination and Immunisation, and pointed out that there was a race between levels of injections and infections. So the quicker, he quotes, people are injected, the less infections will spread. Also, UK food and drinks exports to the EU have halved or almost halved in the first quarter of this year. Looking at the US and across the pond generally, we have California declaring an emergency due to the heat wave. US Catholic leaders begin a process that they may call for the president, that's President Biden, to be barred from Holy Communion due to the abortion policy his administration's adopting. And Kim Jong-un of North Korea stated that his country needs to prepare for both dialogue and confrontation with the United States, and especially to get fully prepared for confrontation. So a few little dilemmas to deal with there. Now, We are expecting next week to see more volatility in gold and silver prices as an aftermath to the Fed's announcement last week. We stated earlier today that we envisage having a clearer direction as to gold and silver prices over the next couple of weeks, even though the technicals suggest a further weakening in prices. Much obviously depends on the US dollar, and we suspect that seeing the ramifications of a hawkish approach, or a so-called hawkish approach, though frankly we did not view what was said on Wednesday as particularly hawkish, frankly, but seeing the ramifications it has had on markets generally may to some degree put off other central banks from announcing similar, and perhaps riding the wave of dovishness to keep their economies and stock markets more buoyant. If this does happen, then the US dollar will strengthen further, and we will see lower gold and silver prices as a result of that. Of course, that won't go on indefinitely, but we're talking short term here. So our gold trading range for this coming week obviously changes to take account of recent events. Now, we foresee regular trading for gold moving between this $1,700 and $1,800 level, with $1,650 to $1,850 as outliers. If there are further pieces of information that are announced that will cause the dollar to strengthen even further, then even those outliers at the lower end will be broken. Though we think and are reasonably confident that that $1,650 to $1,850 should be a sufficient parcel into which gold will be contained, at least for next week. We may have a different view the week after, however. Silver we see trading between $25 and $26.50, because we're not ruling out a little bit of a small hike as an attempt to recovery, but we have 24 on the downside and 27.50 as the top upside, both as outliers. That's it for now. This video is long enough. We are going to produce one or two interesting videos either today or tomorrow, so please watch out for them. Press the bell sign, subscribe first if you haven't. Press the bell sign so you're notified of those videos, because we are going to go into a little bit of depth as to whether perhaps the Fed may actually regret having said what it did last Wednesday. And we're also going to look, potentially, without recommendation, as to how one should approach investments, generally, and including precious metals. So please watch out for those two videos. Thank you for listening. Please share your thoughts. Hopefully press the like button, thumbs up, and have a great weekend, a safe weekend, and a prosperous week ahead. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.